YouTube. Welcome back to the Investing on a 9 to 5 YouTube channel. It is your boy, the Dividend Dog. Happy Friday out there, guys. Got a quick video here for you guys going over two of my favorite holdings in the portfolio, SCHD and ET Energy Transfer. But before we dive into the video, guys, want to give you guys all a shout out there for liking and subscribing to the channel. And if you're new to the channel, welcome. Please do not forget to turn on your notifications, smash that like button, and please subscribe to the channel for me. I'm trying to get to at least 400 subscribers by the end of the year. So we are almost there. And I appreciate you guys for locking in with me. So let's go ahead and dive into the video. So first up, we got SCHD, the Schwab U.S. Dividend Equity. If you guys been following along with the channel, you guys know how much I love SCHD. SCHD recently hit a new all-time high today. I think it was at like 29.40 or 29.47 or something like that. Don't really know it off the tip of my tongue. But as you guys know, I've been trying my best to get at least 200 shares by the end of the year, and we finally freaking hit the goal. A little bit over it now at 204 shares. A little bit over $6,000 total in SCHD, and with the average cost of $27.10. And right now it's up 8%, and that's around $458. Not really worried about it going up 30-40% quickly or anything. I'm in for the long haul. I'm going to keep adding as much as I can when I can, and so on. And then next year we're going to go at it again with another 50 a week challenge and add more shares. Hopefully we can get another 150, another 200 shares, and we'll be talking 400 shares by this time next year. Let me know in the comments, guys, if you guys are following along and doing the 50 a week, or 50 every 2 weeks, or 50 a month challenge, or 20 a month into SCHD. I just want to know if you guys are following along and liking what you guys are seeing from this ETF. And if you guys are new, SCHD, like I said, is a dividend equity ETF that holds a lot of powerful dividend growth companies with good balance sheets that have a rich history of paying dividends and increasing their dividends. And they also have a good history of weathering the portfolio when the market does take a pullback or have a minor, downward trend, I would say, when we're cooling off, or they call it a market throwback. But yeah, these companies normally hold up pretty strong and do pretty well. So we got Lockheed Martin, Altria, UPS, Texas Instrument, Verizon, Home Depot, Chevron, BlackRock, Cisco Systems, and Bristol Myers. So well diversified for their top 10 holdings, which makes up 40% of the total assets. So I like to talk about these 10 here. Obviously, that's why they're the top 10, because, like I said, they're 40% of the ETF. And like I said, guys, these all have rich history of growing their dividend and having good cash flow flowing through the business with a solid balance sheet. So yeah, SCHD, guys, woo, woo, woo. We finally got up to that 200 share count. And like I said, I look forward to doing this again next year, and continuing and starting it back over again, and letting it compound, guys. So awesome. Like I said, guys, let me know in the comments if you guys have been following along or doing your own SCHD challenge in your portfolio. Next up, we got the mighty ET Energy Transfer. ET finally took off this week. Really had a good month overall. It's up, 16% this month. Right now, we got an average cost of $14.69 with 600 shares total. This right here would be I'm calling this a full position for myself, unless we do a pullback to $17 or a little bit lower than that. I'll try to accumulate some more shares. But right now we're starting to get some of those gains that we've been patiently waiting for, that we've been continuously to buy, and waiting for this type of run up here with the company. We're up 29%. It was up about 30% earlier today, which is around $2,600. Total market value just in ET is at $11,445. So if you guys don't know about ET, I love the company. I like what they do. I know how they make their money. Been on majority of the earnings calls from last year before. I was really preaching on the channel. This was the one energy stock to buy in 2023. Back in 2022, when the company was at $12.66. And on this chart here, it says when it was at $12.66 that it was down 27% over the last 5 years. And that kind of steer away, a lot of investors from investing in a company because the past wasn't looking too great, and they recently had cut their dividend. But management was on the earnings call saying how they were going to turn the company around, get that dividend back to pre-COVID levels, which we are above now. And now ET, with all the acquisitions, the new president, with Trump getting into the White House, a lot of things are starting to fall in place for what they've been doing and what they've been building. And a lot of things have been on pause for them just because of clean energy and all of that jazz with the current, presidency that's in the White House now. And I think Trump's going to turn that around, for ET. As you guys can see, the last 5 years, now it is up 63% at 1904. It's a whole different ball game now. We've gone past this plateau here. Now we're making up to new higher, all-time highs. And ET was originally a $35 stock back in, I think, 2018, 2017, and then it fell all the way down to about $9, $10, and that's when I started to accumulate some shares at the end of 2020, going into 2021. And as you guys know, or if you don't know, ET has, America's largest energy portfolio. They got over 130 miles of pipelines across 44 states. They transport the oil and gas products that make our lives possible. They've been supplying America's energy for more than 2 decades, representing a journey of small interstate natural gas pipeline operator to one of the largest investment grade MLPs. Their firm has a leading natural gas pipeline footprint to well position to cater growing electricity and AI demand. And they have opportunities to serve the growing power loads from the new, like I said, AI demand centers across their pipelines. On their recent earnings report for Q3, they reported a net income of $1.18 billion, up 103% compared to quarter three of 2024. There's lots of volume on the firm's assets, continue to increase on the quarter with an addition of they're growing organically with their projects and acquisitions, as I mentioned before. Their crude oil transportation volumes were up 25%. Natural gas lines fraction volumes were up 12%. Natural gas transportation volumes were up 4%, and midstream gathered volumes and produced volumes were up 6% and 26% respectively. So once again, guys, great earnings report from ET. As you guys know, the earnings per share is one of the things that help drives the price up. And then also, too, with that cash flow coming in, guys, that's the only thing that's going to help support the dividend and also, help, push up the price as well. The patience paid off. We've been trending sideways in this $16, $16.40, $15.10, got all the way down to $14.90, and then back up. So we've been hitting resistance, go back down to support, back up to resistance again, kind of hang out around mid resistance. And then all of a sudden, we finally got our breakaway from that to create new all-time highs. All right here, guys, is just patience and trusting your gut, trusting your conviction, and also believing in the company as well. So that's just if you've been buying ET or if you've been following along with the channel, kudos to you. All that patience and buying is finally beginning to pay off for us. And I don't think ET is done. I really do think we can see $20 here by sometime early next year. And as you guys know, with all the AI demand, it's here, it's coming. I mean, all based off of the NVIDIA earnings, based off of Google's earnings, Amazon's earnings. I think Meta has earnings coming up here in February. All this AI is going to require a tremendous amount of computing power and all the specialized chips to help it thrive. They're going to need a lot of energy. Many of them are going to require up to 5 times the power to power up the chips, which is going to be crazy. And ET's co-CEO, his name is Thomas Long. He really was on the earnings call talking about the opportunity that they see ahead for gas power generation. He, in quote, stated, with forecasted AI and data growth creating, rising electrical needs, the necessity for grid reliability is becoming increasingly important. It is clear that natural gas, which one of the things that ET provides, will play a significant role in helping meeting this demand. Data centers not only require a lot of power, like I mentioned before, but it's in the need of a steady supply. AI data centers, they must have uninterrupted electricity for 24 hours, 7 days, 365 days a year. Natural gas can meet those needs for the base power loads, which renewable energy can only deliver with expensive battery storage as a backup of because of its severity. ET believes it is in an optimal position to capitalize on this opportunity. They have data centers calling them now, trying to get them to supply power to their data centers. This should help drive the robust growth in the future, and it's going to help again improve those earnings even more cash flow, better earnings, better price. Continue to give us that 3 to 5% dividend raises, which is totally icing on a cake for us. That should help this our MLP ET, lots of fuel to increase like I said, increase the lucrative distribution. And I think the yield sits around 7.5% that ET currently pays out right now. And I think ET pays me around $780, almost $800 a year just in dividends. And eventually I'll get that up to $1,000 a year from ET just paying me in dividends and letting it, let compound interest do its work, guys. So, guys, that is all that the dog had for you on this wonderful Friday. I hope the market treated you well. I hope the week treated you well. Hope everything's going well in your life. Thank you guys for being here. Once again, it is your boy, the Dividend Dog, on the Investing on a 9 to 5 YouTube channel. You can also find me at the Dividend Dog on X, aka Twitter. Come join us, guys. We are trying to do our best to help alleviate our portfolios and grow this generational wealth step by step, brick by brick. Once again, thank you guys for being here. Like and subscribe, and I will catch you guys in the next video. I'm out.